Limited Q4 and FY25 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Biplab Debbarma from Antique Stock Broking. Thank you, and over to you, sir.
Thank you. On behalf of Antique Stock Broking, I would like to welcome all.
And delivering an EBITDA of 335 crores and EBITDA margin of 15.9% in the fiscal 2025. Kindly note that the above performance includes this other income and also is reported post the acquisition of Mani Precision completed in March 2024. At the segment level, if we talk about the engineering business, which includes the MPPL Mani Precision business, reported a sales of 528 crores and EBITDA of 81 crores with a margin of 15.3% in the fourth quarter of fiscal 25 versus the sales of 234 crores with an EBITDA of 37 crores and an EBITDA margin of 15.6% in the fourth quarter of fiscal 24. In the engineering sector, the auto ancillary segment experienced robust growth in the domestic market. However, export markets remain subdued for auto ancillary and engineering consumable segments, primarily due to ongoing slowdown in the European automotive market and the disruptions caused by the Red Sea shipping crisis. Looking ahead, we anticipate growth momentum in the aerospace business following the resolution of the production issues faced by one of the major aircraft manufacturers, which had previously led to delays in order fulfillment. Now let me talk about the debt and the cash position at Raymond Limited. We continue to remain a net debt-free business with a net cash surplus of 263 crores in the March 2025. The total gross debt stands at 677 crores and has cash and cash equivalents of 940 crores as on 31st of March 2025. In terms of the operations, the aerospace business has started showing promising signs, which was earlier impacted by ongoing production issues leading to delays in dispatches. We have witnessed signs of recovery and the business is getting back on track. Additionally, recent softness in the auto sector, component sector due to weaker market may impact the growth in the near term. Looking ahead, we remain optimistic about our growth prospects. Our diversified business portfolio, strong market position and strategic initiatives will continue to drive value for our stakeholders. Now let me also talk about the real estate segment, which is the demerged segment, to give clarity to all of you. In the fourth quarter fiscal 25, the company signed 2 additional joint development agreements, one in Mahim and another one in Wadala, aggregating to a gross development value of 6,800 crores. Both these projects are poised to contribute substantially to our future growth and solidify our presence as a key player in the Mumbai metropolitan region. With these additions to the total potential revenue from our current real estate business is now reaching close to 40,000 crores, which includes 25,000 crores from our Thane land parcel and 14,000 crores from the JDA-led business model. The construction momentum across all our launch projects, both in Thane and Bandra, is progressing well, demonstrating our commitment to timely delivery and adherence to high-quality standards. In all our projects, we are ahead of construction timelines, and a comprehensive update on the construction of our projects is provided in our investor day. We continue to witness a positive response and traction in our residential and high street retail projects. We have also received a booking of 636 crore in the real estate business, primarily driven by the demand for the Address by GS 2.0 10x era sale of retail shops in Thane, as well as JDA project of Address by GS in the Bandra project. We at Raymond Realty offer affordable luxury apartments ranging from 1 BHK to 4 BHK that caters to multiple segments of the society in a stated strategy to sell and construct fast, leading to quick project completion and faster revenue generation, and that has resulted in a revenue of 766 crores in the fourth quarter of fiscal 25 vis-a-vis 677 crores in the fourth quarter of fiscal 24, recording a growth of 13%. The segment reported an EBITDA of 194 crores in the fourth quarter of fiscal 25 compared to 171 crores in the fourth quarter of fiscal 24, which is a year-on-year growth of 13%. EBITDA margin stood at 25.3%, flat in quarter 4/25 vis-a-vis quarter 4 FY24. We continue to remain a net debt-free business in the real estate as well, with a net cash surplus of close to 400 crores in March 2025. We remain optimistic about the continued growth in the real estate market. Overall, our project pipeline remains strong with several developments slated for launch in the upcoming quarters. We are committed to future expansion through an asset-light business model via the joint development agreement route, aiming for a 20% year-on-year growth in the booking values. Thank you again for joining, and we would be more than happy to take your questions. We will open the line for questions. Operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you are requested to press star and one to join the question queue. Okay. Participants, please press star and one to ask a question. Participants, please press star and one to ask a question. The first question is from the line of Ujjwal Lal, an individual investor. Please go ahead.
Okay, so I wanted to ask on the realty division front, what is the generally peak funding requirements from our side in the JDA, and at what rate are we able to get construction funding, and how does it differ from other leading developers?
Yeah, Raymond, will you answer the first part, and second part I will answer?
Yeah, sure. So basically for each JDA, considering the size that we are looking at is upward of 1,500 crores to 2,000 crores of GDV for each project. On an average, the peak funding requirement ranges between 250 to 350, maximum going up to 400 crores. Depending on project to project, it can be different. But that's the range, between 250 and 400 crores. And Amit, you want to answer the second part?
Yeah. So basically, you see the interest rate anything between 8 to 9 a quarter, and that is a rate because the company enjoys a good credit rating and has demonstrated very well. So that's the reason we get at these competitive rates.
Yes, thank you. And just another question. I think in all or most of our projects, we have contracted the contractor capacity, and do we continue to plan to do the same, or do we also have contracts with some other contractors?
So the way the contracting entire process moves is it's a competitive bid for each project. that we float, and various contractors of different caliber quote for that. Then a negotiation takes place, 2-3 rounds of negotiation, and finally a contractor is decided basis that. Now we have capacity for some of the initial projects that we have granted, but we have used other contractors, smaller contractors also for part of the work. And going forward also, it will be a competitive bidding process. Now, whosoever gives us the most competitive bid and also wins on the various attributes in terms of financial strength and capability to give us quality and build, will win the contract. So nobody is fixed in that sense.
Okay, and just like on the JDA front, how is the launch pipeline looking like? Can we launch Mahim in Q1 or any other, like the sequential JDAs which we have signed? How is the launch pipeline looking for this year, both in Thane and JDAs?
So in the current year, you will see a few launches from us, but they will all be in Q3 and Q4. You may see in Q2 some launch in Thane, but Q1 we haven't scheduled any launch because usually it's generally a low period and not many launches also take place.
Okay, sure. And like maybe a detailed answer since there are not many participants on the call. Can you please inform us about the whole timeline of a JDA, like how it works, right from the discussion and getting the contract and clearances, etc., to construction and launch?
So certainly. So see, each JDA is different. If it's a society redevelopment, it's a slightly longer time cycle because of the legal process it has to go through, and many players get involved as far as the society management is concerned. So that's usually 15 to 18 months, sometimes can even stretch to 24-month process from the time you get appointed to the time you can launch the project. But some of the other JDAs which are not going through the society redevelopment, or if somebody's already done the work and we are getting involved at a later stage, then it can be even as short as 9 to 12 months that from signing to actual launching of the project. So that's the range typically from 12 months to 24 months for each JDA from the time you get appointed and to the market launch. And all the intervening steps happen in between, which is approval, planning, etc., etc.
Thank you very much and all the best for this year.
Thank you.
Next question.
Participants, to ask a question, please press star and 1. Mr. Biplab, you can ask your question. Please go ahead.
Yes, Biplab.
Oh, sorry, I was under mute. Hello, good afternoon. Everyone.
Good afternoon.
So I have 3 questions. I will start with overall, how's the market? That is the primary concern of all of us analysts and investors. So my first question is on the state of real estate, residential real estate. How have residential real estate sales trended over the last 3-4 months, including May, April? Are we beginning to see any signs of moderation in absorption, some dip in footfalls, or lower conversion rates, or overall buyer sentiment softening? That is my first question.
Yeah, so I'll take that, Amit.
Yeah, please.
Yeah. So as far as Q4 of last year is concerned, Jan and Feb were usual months. There was not too much of let's say, effervescence or ebullience that we saw in the market. But March was extremely good. March, we saw very, very good demand, much better than we usually see in that month of the year. So we got substantial bump up in the month of March. So whatever slowness was there in Jan and Feb kind of caught up in that. So quarter was pretty good for us. In April and May so far, it's business as usual, barring the last 1 week. We saw some dip in the falls. I guess that was more to do with the fear and the uncertainty because of the war-like situation which got created. And the inquiries seem to be flowing back as of yesterday itself. Again, calls of whatever people were holding back since the news of ceasefire has come. Again, the phone calls have been ringing and people are already booking for the coming weekend. And they want to come and see the sample apartments. And so footfalls are again back, barring these few days. So on the whole market, it seems to be good for us for all our projects. Wherever we are present, we haven't really seen any dip on a quarter-on-quarter basis. Yeah, of course, every week or every month is not the same as every other month, and it's also a slightly seasonal business. This is the period of summer vacations in any case, so quite a few people are traveling from the city. So our planning also is according to that in terms of the way we budget for what will be the sales in April, May. But they seem to be completely on track and on plan as we had budgeted. The market seems good for us.
Okay, that's a good news. And second question is on the supply that coming to MMR region. So do you see supply increasing across MMR? I mean, at least you can see whether there is an increasing number of competitions around your projects. But the reason is particularly as several developers who acquired FAR at discounted rate a few years ago, and they might have launched and they would be beginning to launch projects. How do you expect the market to evolve as this new supply comes in, especially in terms of pricing? Or if pricing doesn't soften, then maybe absorption. So basically trying to understand the competitive intensity across MMR. That is my second question.
Yeah, as of now, the supply scenario seems to be well balanced and not very different from what it was last year. Or in fact, the supply has only been going down in the market as the absorption has been increasing. So the number of launches have not really been able to keep pace with the demand which has been in the market. So, and that's why last 2 years you've also seen the prices also firming up a little bit. While they've been very, very healthy in terms of appreciation, they haven't run away. So which is also a good part. Now, going forward, it is to be seen how many launches actually hit the market. This is a question which was asked earlier also as to how long it takes for a project to actually hit the market. So the time to market for a project is typically 24 months if a developer is very efficient. I mean, that's how our market operates in any case. And some of the players intentionally hold back launches, or some of them are not as efficient. So if you take all that into account, I really don't know how many launches are planned for Q1, but whatever little bit we know, I don't think there is going to be any deluge of supply or large number of launches which may happen. Also, there are artificial constraints which are there because approvals also get delayed to some extent in that. For instance, there is a Supreme Court case going on for the environment approval just now. So some of the projects who get impacted by that, if they are within a certain vicinity of an eco-sensitive zone, and Bombay also gets impacted with that because Sanjay Gandhi National Park is right in the heart of the city. So some of those projects will also get delayed in terms of getting their approvals. So taking all that into account, I don't think supply scenario is going to change dramatically in the next 3 to 6 months.
Okay, that's both the questions. I mean, regarding demand as well as supply, these are very encouraging. My third question is to Gautam Maini, sir. Basically, just wanted to know, there are so many things happening in the country and across the world that it's difficult to take a firm outlook. So just trying to understand, sir, Gautam sir, what is your outlook of aerospace and auto? How do you think things will pan out in the next 1 year?
Gautam, you're there? Gautam?
They are in the call and they can speak. Their line is unmuted. Mr. Gautam, please unmute yourself from your side to speak. The line for the management is disconnected. Ladies and gentlemen, please wait till I bring them back in the call.
Not available. At the tone, please record your message. When you have finished recording, you may hang up. We have the management back with us. Sir, can you please try?
Yeah, just hold on.
Yes, sir.
Yeah, extremely sorry that our line got disconnected. Gautam,
Yes.
you are there?
Mr. Gautam is there in the call.
Yeah. Gautam, there was this question on the outlook about the aerospace and auto business. I don't know whether it got answered or you have yet to answer. Please answer that.
Operator, have you connected Mr. Maini?
Yes, they're there in the call.
Have you unmuted them because they
Yes, they are unmuted.
Gautam, can you hear us?
Their handset may be muted. Just tell them to check their handset.
Yeah. The line for Gautam sir has disconnected. I'll connect them again.
Are we able to get or
Mr. Gautam is back in the call.
Gautam, are you
I
able-
could, I could listen to everything, but I think you couldn't hear me. So
Yeah.
I heard the last question was the aerospace and automotive market. If we are there, then I can continue.
Yeah, please.
Okay. So basically, let me start with the aerospace market. I think the markets now are looking very good compared to last year. As you're all aware, last year there was a serious problem with the Boeing aircraft. They had their own internal issues, and because of that, the aircraft production from Boeing was severely impacted. You're also aware that between Airbus and Boeing, they capture the majority of the aircraft market, and hence it's a big relief for Boeing to come back to its levels. It's public information that the narrow aisle aircraft, they're already producing now 32 at a rate of 32 plus, and they are moving towards 38 aircraft. So we can already see the pull, and those reflect the numbers of the last quarter. So the aerospace market is definitely recovering, and it will continue in that pace. You're all aware that aerospace is a market which has 8 to 10 years of backlog, and therefore barring incidents which are not related to business, such as we saw in the days of the COVID, or we saw in days of maybe there's a strike or some unnatural thing that happens. Otherwise, the aerospace market is extremely bullish going forward, as well as due to the high backlogs. In terms of automotive, it's a mixed market, I would say. The automotive markets in India are still much better. The ones overseas are definitely falling. But the news that we have to look at is that even though markets are falling, the supply chain constraints in both Europe and US are going to be high. The geopolitical situations will definitely are working out, and we're all seeing changes on a daily basis. We strongly believe that overall it will still remain positive for us because of those situations. And of course, as of now, since our major markets are in Europe and in the US, we don't immediately see any issues due to the current affairs. So yeah, overall, I would say we're looking forward to the coming year.
Thank you.
As there are no further questions from the participants, I now hand the conference over to Mr. Amit Agarwal for closing comments. Over to you, sir.
Thank you. Thank you, everyone, participants. Thank you very much for taking interest in Raymond Limited. And now we will have the demerger into real estate, as well as Raymond Limited will have the engineering business. And look forward talking to you on next quarter. Thank you.
On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.